Happy Wednesday, everyone. Thank you so much for joining us for another session of RM Smart Investing. Today's class is titled A Sample Trading Plan. About 2 years ago, I did a class on a business of trading and trading plan and trading strategies. And I thought it would be a good idea to actually put it in a little simpler way, to have it like a sample of how we can apply and try to use this trading plan. And I think it's also is very important to understand that it is very, very crucial to have a trading plan. Before go through that, I thought, I mean, I know most of you know Mark Douglas, and with the markets the way they have been, what he says is the consistency you seek is in your mind, not in the market. And I think it really says a lot. And the second, the hard, cold reality of trading is that every trade has an uncertain outcome. And this is what makes it so difficult to be a good trader. Because as human beings, as people of habits, and especially if you're competitive, it is very, very difficult to accept that. So with that in mind, that's what I thought. It's a very timely lesson. And again, to trade your plan, not your emotions. And you have to understand that trading plan is a roadmap. So when you're building a house, when you are, let's say, as a portfolio manager, for instance, I had to have an investment policy statement. As a mutual fund manager, we have guidelines, which we set it up first before we get into that. So we have this structure. Trading is one of those businesses that many people get in with no really structured path. I give you one example. For instance, last January, as you know, the social media, a lot of meme stocks. We're talking about Reddit and Wall Street bets. People just look at social media for the tips and for guidelines. They're watching TV. And what happens is that's the reason a lot of traders don't stay in business for too long, because they really don't have a guidelines. And this is one of those businesses that, again, we have to approach it as a business rather than a hobby. So I think this is an art and a science that has been forgotten. So I thought it would be a good idea to have a little steps. It's very simple. You can do it yourself, which is very important. Everyone is different. So I want to just give you a little, again, outline and a little guidance, hopefully, to make things a little easier. So the first thing, when we're trading, we have to have the conviction and have the clarity why we are in this business. Again, this is approaching as a business. So for me, again, why am I trading is because it really allows me, it has allowed me all these years, that freedom and the flexibility. It has allowed me to be with my family and travel around the globe and not to be concerned about whether my business is being run or not. Obviously, it has unlimited financial potential when it's done the right way. It also creates situations to challenge myself. A lot of you are into sports and competitive, and this really, it kind of satisfies that urge in me and makes me more even competitive. So because of those situations and the challenges, it actually, it is something that I look forward to it, although there's a lot of setbacks, but the good thing is it's another day. It also allows me to understand myself more and more. This is probably the most honest business because it's you against you and the markets. So basically, it's a very, again, authentic and very honest business. You cannot cheat yourself. You have to look at your trade. At the end of the day, it tells you whether you were a winner, you were a loser, whether you learned, you didn't learn. At the end of the day, either we pay the tuition or we lend money to the markets. or we had the money given to us, or we took it from the market. So it is a very clear-cut business, and you continuously grow. What happens is it's amazing how much you learn about yourself, that through all these the trials, and basically it is again fascinating business. So the second question you have to ask is, what do I want to accomplish? So it's great to have that, but do you have your goals? I just put, for me, again, it's not about, how much you want to make in a day, for instance, or a week, or a month, or a year, or 5 year. You want to have those plans. You want to see more of the process. We want to try the strategies, see how successful we are in it. You want to feel in command, knowing that you're confident, you're competent, and you are in control of you. And as I read, there's always uncertainty. So we cannot bring a surety and certainty. If it was certain, everybody would have been in this business, and nobody really would have made money, because if everybody's making money, they're taking it from someone. So if everybody knows it, there will be very little profit margin. So because of that, you want to learn the process. So if for one day, maybe you can say, oh, I'm going to try the strategies, and I want my winning rate to be this. Sometimes when we put like absolute numbers, oh, I want to make $1,000 a day, it puts actually more pressure on you, because what happens is, if you made 925, you want to get that $75, and you end up losing $500. So that's why it is good to have a little longer term. Do not do it just on a daily basis. So I look at based on trades, not based on the money I made. For my 10-year plan, I just want to share with you, obviously, the youth education is very important to me. I want to create foundations. I want to create charities. So that has been my goal. So it's less than 10 years. This is what's going to spend about 5 years. So that is my goal. You can create your own, again, objectives. The next question will be, what markets do I trade? Based on your personalities. And, we've had, again, some videos in the past to know it thyself, how you can find out who you are. So the markets that I trade, I do stocks, options, futures, Forex. I do alternative investments, and it could be private equities, real estate, gold, precious metals. I have done, some of you probably doing NFTs and crypto. Find out what is your niche. Learn about these things, because they're very much interrelated. But some of them are, you have stronger connections. So choose the one which matches your personality. Sometimes you want to be a very short-term trader, so perhaps you can use maybe futures, or you want to use maybe options. Sometimes if you want to be longer term, well, the stocks will match. Forex will be in between, you can do short-term or long-term. So basically that's the next question. So the next part will be, is the resources. What kind of resources you have available, and make sure you have the best ones. Like, for instance, for me, the computer is very important. So I have, it's a titanium trading desktop computer. I have multiple screens. I also have, actually I have 4 laptops, where I have 2. I use one, and the other one is ready to go if there's a lot going on. And those are also backups. So for instance, if something happened that the power's operationally, the power is off, I would have my basically my laptop with the battery. And also you want to have very good platforms, trading platforms. So for instance, some of my favorites are TradeStation, TD Ameritrade, Thinkorswim, Infinity, Tastyworks, Oanda for Forex. So have, find the ones that match, again, good platforms. They have good chartings. They have good backup office support, they technical support. You have someone live to talk to, and they're quick in their executions. And as I mentioned, have a backup plan for your operational risks, such as loss of power, or it has happened, like middle of the, sometimes I see your computer just shuts down. my computer goes and the window is trying to update itself, or the, my computer itself wants to, oh, you want to do some kind of a cleansing. So basically just be prepared. That's why you want to have multiple. Also, your office setup, your chair, your desk, the height of it, your mouse, and you can have the good lighting and good lights, comfortable chairs. So those are also important. Then you want to also decide what kind of capital you're going to use. Is it going to be, this capital is going to be specifically for trading? Is it going to be for investing? Is it going to be for swing trading? I have separated those. So I want to make sure my goals are absolutely clear. So I know, for instance, for retirement accounts, well, obviously the tax sides are of, something that I can, I can basically be patient, knowing that I could have long-term investments, I could have maybe dividend investments in those. But for short-term and day trading, for instance, well, I have to know how much capital I'm devoted, and based on that, I can decide my risks and my targets. What time frame do I trade? Now, again, mainly I do day trading, so it's like 5 minutes. I had 10 seconds. Some of you have seen that, but I usually like 5 minutes to 6 hours. That's day trading. I'd rather not to, very rarely I'll let my day trading become overnight. So I keep that, of course, because of the margin requirements also, but mainly I like to have that clarity. When the day is over, I'm done. Swing trade, maybe I use 1 day. I can use some option strategies. That's like 1 day to 3 weeks. And investing for me is 2 months to 2 years. I could also do leaps, long-term options, or I could do 9 months options, 6-month option strategies. And then long-term, which will be my retirement account, maybe I use, ETFs or some kind of a value, I found some kind of a value stocks, or maybe in emerging markets, or things that I feel they will be a growth story in 2 or 3 or 4 years. So I will be patient and I would understand why I'm in that business, in that investment. This is another quote from Mark Douglas. An edge is nothing more than an indication of a higher probability of one thing happening over another. So that's really having your edge, having a strategy. So I've created some mine, and there's a lot of strategies out there. There are many, so I didn't want to bore you with that. So some of them that I use. What setups do I use? So for instance, we could do for equities such as S&P or Dow or NASDAQ. We can use gap trades. I use first hour range. For bonds, we can use range breakout the first thing in the morning. Grains, if there's things are happening that's based on news, maybe the USDA, maybe it is something that happens because of the reports coming up. So I use grains. I have gold trade for evenings, also during the day, first, especially in the morning time. Thursday trades that we have, bond trades, we have earnings plays for options. We have many option strategies. So I have the earnings play. Also have special situation strategies for FOMC or the non-farm payroll or the CPI numbers when they come. So there's different announcements. You have every Wednesday, you have crude oil inventory. Every Thursday, you have natural gas inventory. So all of these go hand in hand. And on top of that, again, for Forex, we use some technical setup. So just come up with some of the setups that you have. You shouldn't have too many. Just for each market, have 2 or 3. Find again your niche. Are you a trending trader or are you a contra trend trader? So basically decide, and based on that, decide what markets suit you the best. And then my entry. So I've chosen what markets I'm going to be, what time frame I'm going to be. So I use my strategies as a starting point. So I'm prepared for that. And then I would use, with those strategies, I want to have, let's say, candlestick confirmation. Or maybe I'm doing another trade. It will be based on CCI or the moving averages, whether I'm really overextended away from moving average, or they're crossing over. We use the DMI, stochastics, MACD. Is there any squeeze? LRCs and Ichimoku. Those are all guidance depending on the time frame. And I look at the multi-time frame for my trades. So I already have, for instance, I know what is my longer time trend, time frame trend is. And based on that, if I'm going to be contra trend, I know it will be a very short term. So I want to make sure I have the big picture in front of me. And you don't have to use all of these. So each market has its own. I use, like, for instance, if I'm using 5 minutes just on a gap trade, I use like Fibonacci. And I use at that time, basically I look at the candlestick confirmation. If I'm just doing midday, we're looking at the range bound, for instance, in the first hour, I like to look at the DMI, I look at the CCI and the moving averages. So each one has its own. So I do not like to scale in most of the time. I usually, especially in investing, if I've done my homework and options on things, I go in all my contracts. So if I'm positive, I go with higher number of contracts. If I'm not, I would go with lower, but I do not like to stage in unless I'm not very confident, but I also think there is a room. So I control my positions. So if I've committed, let's say I said, well, I'm going to do 10, I try to do 2 or 3 in the beginning, see how it goes, and then I will add. But generally, if my setup is good and there's a 70%, I am positive it's going to work out, then I just go in. Immediately, I set up my targets, which is your next question, or next thing is my exits. So I use money management and position sizing for my day trades rather than, everything else, again, the day trading. So technical analysis plays a role, but immediately when I'm doing my options, I already have as far as my exits already set up, and they're mostly based on my targets and based on for instance, my profit percentages. So for instance, my targets and stop losses, they're set immediately as I entered. I don't wait, to see, oh, what's going to happen. And then I get emotional, start playing around with my targets, and I play around with my stop losses. As soon as I'm in, I know exactly where the exit's going to be. For instance, for options, I'm in with a minimum of usually 5 contracts, and I scale out with 25, 50, 75, 100, and 100% return, and then a runner. My losses are set at 50% for options. I usually scale out for my exits, opposite of my entries. And for stocks, I'm out of a quarter with 25%, 25 to 50, depending on situation. That means I got 75% of my position in there, but I took some of my profits, and then I get out at 1/4 of remaining. So if I had, let's say 100, and I have 75 left out of 75, then I go 1/4 of that. So let's say about 18 to 19 shares will go out, and it will just continue. So by doing this, I know that I'm always in a position. If we had things like, again, last year, like for instance, with the AMCs of the world, for instance, or people had Tesla, or they had Bitcoin from 5 years ago, or six years ago. And basically that's what I do. And the remaining, I keep scaling out in the sense that the next step will be 75, 100%. So usually by the time the second trade is done, I've kind of recouped my principal. So basically it's like really pure profits in a sense, right? That third, probably 2.5 trades. So my losses are either dollar-based for futures or technical-based for stocks. So that what that means is, for instance, I do have targets. Let's say on S&P, I put a 2-point stop loss. So that's just the points. I use 2 points. I don't say, well, I watch it technically if it goes below, let's say, moving averages, but immediately I have my targets 2, 4, 8. So those are already done as far as the targets go. But for losses, I have 2 points. It's set. Now, my top losses should not be more than 2% of my account, the most that I will give out. After 3 losses in a row, either I take a long break, I do completely different. If I have to go walk around, we are not too far from the beach. Maybe we go and I walk around there, or watch something. Of course, soccer is my favorite thing. So I decide to maybe do some tapes, watch something else, or I just completely done for the day. I would just have, I did clear my mind. So definitely something different than trading. I don't look at the markets. Now, we talked about, all right, we know what are stop losses, but what about drawdowns? And drawdowns are the maximum drawdown is the lowest intraday value of my account. So in this situation, if I have 100,000, how much of a pain am I going to get in that day, for instance, if we had a flash crash or something? So a lot of times, a lot of people have a big catastrophe stop, and for most portfolio managers or traders is 20%. So if they had 100,000 that day, if it goes down 20,000, they're out. Now, this is sometimes the watermark. So let's say you started with 50,000, now you're at 100,000. Now the 50 is not ultimate, original, it's 100,000 that you're looking at. So you cannot say, oh, I had the 50, you can, I mean, it's up to you, but have that clear in mind. So for me, it's like every day I look at it, it's never happened. So, but the 10%, that was the maximum drawdown. So I'm done. If it happens, I'm out. So basically, if 100,000 goes to 90,000, that's it. But as I said, generally, it's about up to 20%. So how do I evaluate my trades? So you've got all these strategies, you've been in business, let's say, and you say, well, I got this great idea, let's say gap trade, I'm going to trade it. So one of the things in the trading, the time is not relevant. You cannot say, well, I've been trading for 2 years. It's the number of the trades you have to pay attention. So if I want to see how successful I am, I want to look at, in my situation, I look at about 15 to 20 trades before making a complete decision. So, and also it shows me how successful I am. A lot of traders, they look at 10. They say, well, like I did 10 trades, 6 of them were successful, 4 of them were not, but net, it was profitable. I like this strategy. I'm going to continue. That's one way. But you cannot say, well, I've been doing this for 3 months, but I've had like 5 trades. That doesn't mean anything. So I go with number of the trades. For me, the most important things is the profit ratio. And that profit ratio is really, you look at the amount of profits divided by losses. So if I have made 12,000 and I've lost 4,000, well, obviously my profit loss ratio is 3 to 1. And that's what I like. A lot of times it's up to you. You can go with 2 to 1. But so the idea is whatever risk that you're taking, obviously you want to have more profit. So that's why you always want to limit your losses and obviously have more potential for your profit. So for me, is 3 to 1 is important. And every month, at least every month, sometimes I look at weekly, I like to look at my equity curve. I want to see how my profits are looking. Of course, the best looking is straight line, if you could, from left to right. And basically you want to have a nice, not a EKG, your heartbeat. Those are the worst when it's like really choppy. One day you're a hero, one day you're a zero, one day you're making $10,000 and next day you're losing $8,000. Even though net you're good, it's not good for your health. So be aware of that. Try to be consistent. And that's what, again, I look at the equity curve. So what do we do, or what do I do on pre-market activity? Mine really, my pre-market activity starts actually from the weekend. We do our market analysis, and that gives me a map what the week is going to bring. And Of course, we do like the trading ideas of the week. We want to be prepared. So have a sheet of paper, have the calendar handy, so you know if there's any special events coming up, announcements coming up, so you're not going to be caught by surprises. So make sure that's available to you. Generally, in the United States, this happens 5:30 Pacific Coast time. It's 5:30 a.m. or 7 a.m. So these are the two important times. So basically watch for those. If it is happening, try to stay from the market or follow up after. So, and then like, let's say you have 11 o'clock or 11:30, the FOMC, either minutes come up or there's announcements. So watch for those special events. The same thing like Tuesdays or Thursdays, sometimes in the grains, we have the, again, announcements, the government or USDA announcements. So I do that, and then my activities really start the day before. After the weekend, I'm prepared. Let's say there's an earnings announcement. So, but my day starts at 5 a.m. Pacific time, and I like to trade till about 8:30 a.m. Pacific time. And after that, I do, maybe I have breakfast if I have to, I go a little walk, I catch up on paperwork and other things. It's not the best time to trade because again, we have the European markets are closing at that time. And then we have, for instance, lunchtime in New York at 9 a.m. Pacific Coast time, which is 12 p.m. East Coast time. And then 1 p.m. East Coast time, we have obviously Chicago going on lunchtime. So till 11, not much is going on. So at 11, I come back, and if there's any grains trades or opportunities, I like to look at that. And then activities, the volume comes back. I do not usually like to trade after 12:40 p.m. I like to be closed my position if it's possible. If I see there's a potential, I will, but generally I will be more of an observer than a participant. Now, how do I find new opportunities? Now, after so many years, sometimes you just have such a long watch list. Again, I mentioned that on the weekend, I'm prepared. So we have scanning, different kinds. We have access to so much. So the scanning is one way. The strategies I outlined, those are my strategies that I apply. So there's enough that I don't have to overwhelm myself. But there's unusual option volume activities. There's a sizzle index and toss. You have the insider buyers, if it combined with a high short ratio. Those can be a good candidates for maybe a swift, quick bounces. Economic news, especially now, everything is event driven. So those are important economic news. If you're doing Forex trading, it's very important. Earnings announcement. So we play that happens every quarter, but it continues for a couple of months. So those are important. One thing I avoid completely, and again, most of you have seen me, been with me. First of all, I don't believe in tips and tipsters. And no TV. If I watch TV, usually it's on mute. And basically, I just like to see the highlights of what's going on. If there's a news coming, something geopolitically or something. Or if I have to listen, I like to listen to, let's say, the European Central Bank President Lagarde is speaking. I like to hear, I don't want commentating on that, or Chairman Powell is speaking. I like to hear it myself. So I don't need digestion of that. Now, the education. So this is something evolving. So continuously, we've got to grow psychologically and obviously learning about mechanical side, the trading side of things. So it's continuous. For me, every day I'm learning something new, and that's really gets me going to show up the next day. I also review my past trades. I look at my journals. I look at some of the lessons I learned, and I try not to repeat them. Of course, being around for over 30 plus years, it's kind of eventually it becomes automatic, so you don't have to do as much, but it's always interesting to see that. I also reread some of the books that I've read before, and it's amazing how you look at things as you grow older and you become more experienced in a very different light. Like I go back and I look at some of the the sentences I had highlighted, and I see if it still has value or I get too many of them or too little. But that's kind of interests me. And I also look at some industry journals, not related to trading, but also it is basically about that trade. It could be in biomedical, for instance, and you're always looking for opportunities. Also, it's fascinating to see that. And my love is sports. So, of course, I watch and follow the sports, and you can use it as a business too, as well. And I also look at some of my financial news outlets, whether it's Economist, I invest in Business Daily, sometimes Financial Times, and Barron. So it's tidbits. I don't have time to read. Well, I just have specific things. My joy is obviously emerging markets, so I like to stay on top of that. So we constantly are growing and we are learning. So we can also look at some self-analysis with good psychology books about finding who we are. So that's also important. Following up on that, you also have to make sure your physical and mental health. I have to. I mean, it's crucial. It's crucial to have a balanced life. So for me, I devote my time for my well-being and pay attention to my main purposes in life, which are my family, my spirituality. And my spirituality is the glue, which brings everything else together, whether it's the financial, the career, or my work, and my children and family. So that's what's very important to me. But I want to emphasize that balance doesn't mean equal time. We cannot say, well, I'm going to work out 4 hours a day, and I'm going to meditate 4 hours a day, and I'm going to work 4 hours a day, and then I'm going to sleep 8 hours a day. And so basically, what you want to do, you can do 30 minutes of physical activity. During that, I do, like when my son is practicing soccer, I put my Audible and I listen while I'm walking for an hour and a half. It really rejuvenates me mentally and physically. So those are the things you can do. And for trading purposes, if I'm not physically well, I don't feel good, whether it was lack of sleep or I'm not really physically feeling well, I will not trade. And what I found out, the mind follows the body. And what happens is I make silly mistakes and I could push the wrong button. It's amazing how things happen. So that's one thing. But if I'm emotionally, let's say I had a little stress, what I've found out over my years, I do a little trade because sometimes the trade becomes my relief, believe it or not. So it takes me away, and it goes back to sports again, soccer. Sometimes if I have a lot of stress, I either go and right now I cannot, but physically I'm not able to. But I will play soccer, for instance. I play maybe music, play some instruments, or goof around with my son. But what happens is it gets me away from what was really bugging me. So basically, if I'm trading, sometimes it actually brings me out of that stress. So that's what I try. Physically, I cannot do it. Not physically, I'm not well. I cannot do that. But emotionally and mentally, sometimes it actually helps me. So I put a trade, and if I see I'm successful, usually it ends up actually being a good day. But if I see no, I'm really down and it's not helping, then you stop. I mean, you cannot force it. Um, the last but not the least, I think you should always think about your purposes, and you have to reward for the hard work that you're doing. And that's taking a break. It could be one day, 1 week, just take a day. It's healthy to take a day off, go do your favorite things without really thinking, and it really rejuvenates yourself. But doing, modifying your plan and maybe come up with some ideas how you can, improve your trading plan, but away from all the terminals. You can have a week off, go to the beach or travel somewhere. But this is important to have that. And I emphasize this is besides the holidays. For instance, we have 4th of July weekend coming. Now, that's kind of forced on you. You cannot do much, although other markets are open. The futures market will be open Sunday night. But basically, this is something like on your own to reward yourself. Let's say, for instance, as you know, a lot of times Mondays are not the best days for me to trade. So I observe, uh, but the meat of my trades are Tuesday, Wednesday, Thursday. So, and Fridays sometimes. So that's why if I know there's not going to be a lot of fish to catch, why do I want to go fishing? So I can do something else. So with that in mind, I want to make it again short and sweet, because the trading plan, what you built, it should be short. It should be like, maybe I wrote a lot, but it should be very concise, clear, and step by step, in the sense that you have a clear roadmap, knowing that, oh, this is good. And writing is very important. Make sure you write it down. Make sure you feel that you're in command. And then you can modify it, but start with something. So with that in mind, what I'm going to do, I will stop the recording and we can open for